Welcome to Drill Down Earnings. We have quarterly results out from Palo Alto Networks, that giant in security software. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We cover the 50 most important companies in technology. This is arguably the most important company in cybersecurity, one of the biggest, and it's one we pay careful attention to for that reason. Q4 2025 results here, better than Wall Street expected, $2.5 billion in revenue, $253 million in profits, which is down from last year. Nonetheless, revenue growth of 16%, driven by software form factors principally. The product revenue up 19% within that. So, again, services not as much, product more so. But growth is picking up again, at least in terms of the top line for this company. And indeed, the operating margins actually were decent. In fact, the best they've been in quite a while here. So profitability and cash flow, non-GAAP operating margins expand to 30%, free cash flow margin 38%. So this company is actually generating a lot of cash here. Next generation security momentum. So their next gen security average recurring revenues climbed to 32% to $5.58 billion. So their SASE business, their software firewalls, their Cortex, XIM, adding $490 million to that ARR number. And their SASE business doing really well with their Prisma Access or Prisma SD-WAN business. It's a unified cloud platform. I sound like I'm full of Silicon Valley buzzwords here, but yeah, firewall, secure gateways, zero trust access, a lot of offerings in the security sector. And what's really interesting to me here is that this really is becoming kind of a one-stop shop for the sort of principal aggregator of cybersecurity tools. One way to think of cybersecurity companies is there's companies that have sort of solutions and fixes to individual or certain sets of problems, and then there's these guys trying to be a platform here. And it looks like this platform strategy, which is a risky strategy, right? Trying to be something for everyone. It's working at Palo Alto Networks, and it's interesting to see here. So their RPOs, that was a really stunning number. This is essentially billings or stuff they haven't billed yet, but contracts they've signed, surging to $15.8 billion. A big jump, 17% jump on a year-over-year basis. So the market loved these numbers. The stock is up 5% in after-hours trading after only being up 6% in the previous year. So almost equal to the year's gains just in the afternoon after the results came out. Now, I mentioned the platformization. They started giving us some numbers about 2 years ago from this company. And they tell us how many customers they've got of over $10 million in ARR. That's up 50%. And they tell us about these, but the number of platformization deals, the companies are using Palo Alto Network solutions as their central platforms for cybersecurity. Big numbers here. They're up to 1,400, which is fantastic. 12% growth on a year-over-year basis. And it really shows that Nikesh Arora's approach here of trying to be the central platform for cybersecurity is working. Here's what he had to say in the conference call.
The consolidation is 99% perspiration, and you see that. That's why we've set ourselves on this plan of platformization. And I think the reason we highlighted a $50 million ARR deal, that's a big number in technology, whether it's cybersecurity or anything else. That tells you the art of the possible. If one was able to consolidate the entire security spend of a large customer, you can get up to $50 million in ARR. I think if you look around our landscape, many companies are still reporting $1 million customers, right? If the art of the possible is 10, 20, $50 million in ARR, that shows you that's where consolidation is headed. Now, historically, whether it's CRM, whether it's ERP, whether it's HR, workflow, it's ITSM, all these markets have started as fragmented markets. They've just been around 25 years longer than we have. So if you play this movie 10, 15 years out, there's no reason why our install base of platform customers should not continue to rise at the pace we're trying to predict it's going to rise. So can I see ours going from 6 to 8% market share to 15, 20? Yes, I can.
So there you hear from Nikesh Arora. But what's it all mean? What's your big drill down earnings takeaway, and what's the one number that tells us a whole lot? So Palo Alto Networks' fourth quarter 2025 earnings, your essential summary tells you that revenue growth has picked up to 16%. And while profits were down, operating profits were up, free cash flow is up. And I think the most important thing that was up was the RPO, the remaining performance obligations for this company. They have signed so many deals that RPOs were up 24% in a quarter when revenues were up only 16%. And I think that's the most important number, the one number that tells you a whole lot. The drill down earnings bite is indeed 24. because that's how much RPOs grew, and it really suggests that there's a lot more revenue and, yes, profits coming from Palo Alto Networks. All right, subscribe to us. You can follow me on X at Cory TV, or check out at Drill Down Pod on Instagram, TikTok, or on YouTube to catch all of our earnings analysis.